What's been interesting over the last several years is that there's been a tremendous amount of money that has been funneled into venture capital and growth equity and just like private markets. It's kind of a circular loop where companies took longer to go public. And because they took longer to go public, a lot of the returns were generated when they were private. So it used to be like companies like Amazon went public and were valued maybe at $100 million, $500 million. And you could ride that from a $500 million valuation all the way up to like, what are they worth today? Like 2 trillion or something, right? But a lot of that return happened in the public markets. And today, you look at like the companies that are getting funded, like OpenAI is a good example of this. Actually, I guess they're valued at like closer to $300 billion and they're still privately traded. So like 0 to 300 billion in value creation effectively has all been captured by private investors. And then that's created this feedback loop where, well, if I'm an investor generally and I want to capture some of these returns, then I need to invest in the private sector. And then what that's done is more money's flown in, and then companies, because they can raise more money without going public, as there's now more money, they do that and they extend out how much longer they're going to go public. That's more value that can't be captured unless you're investing in the private market. So that forces more money to come into the market.